Hey everybody, Henry Becker, Director of Research with Lighthouse Wealth Management. Putting out a quick video as we come close to the end of the first quarter of 2018. We've had a lot of conversations and phone calls with clients regarding the pickup in volatility in stocks, but it's also in bonds and currencies. But we figured we'd put together a quick video to outline that the volatility that we're seeing isn't so much an anomaly as one might think it is.
So our first slide is a little more than 2-year history of the S&P 500. So we can see back in 2016, which is the last time we had any significant pullback in the stock market prior to what we've been experiencing in 2018, we've had a very smooth return path on the S&P 500. Actually, in 2017, it was unprecedentedly smooth in a historical context. So in our next chart, we have corrections or significant downturns in the market since 2008, leading into 2018. So as you can see, the chart is chronological. It shows the percent correction that it was experienced and the number of days from the top of the market till it bottomed out. So for example, in 2008, 2009, the last really big correction we saw, it was 517 days from the top to the very bottom in that downturn. So what's happened here in 2018, we saw a 10% drop over a 13-day period. Now, we went from 2017, obviously you can see in here, 2017 does not appear. 2017 was an extremely smooth return path, and then we get this volatility, which on the flip side was extreme, because as you can see, a 10% move over 13 days. We hadn't seen anything like that in the last 10 years. So the aggressive nature of the recent volatility coming after the smooth path that we've seen, it stands to reason why a good number of clients have brought up the idea, where's this coming from? So what we want to get back to is that volatility, as we can see in this chart, is normal. What was abnormal was last year, 2017, where we saw virtually no volatility.
So while we've seen a return of volatility to the markets, it's to be expected. Now what is the surprise is that we had 2 years of virtually no volatility, and now we've gotten aggressive volatility at the beginning of this year. So the contrast between the two has made it appear as though the volatility is an anomaly, when in reality it's to be expected. Now, we think the global economy is still on sound footing with globally low interest rates and very supportive central banks around the world. So, if you have any questions, issues, or concerns regarding the markets or your portfolio, please feel free to reach out and contact us.